Hey there, it's Lee Romano with the Home Team Group with Keller Williams Space Coast. We've been having conversations with our clients about the rising interest rates. Now, while it's true that interest rates are higher than they were just a couple of years ago, 7% is still below average over the last 40 years. I mean, who can remember 18% interest rates? So if you need to make a move, it's not as prohibitive as you think it is. So today, we're going to share 7 mortgage hacks, things that you can do to reduce the amount you pay and the duration of your loan. Now, every situation is going to be a little bit different, so you're going to want to contact your financial advisor or your mortgage lender. If you don't have either one of those, contact me and we'll get you connected with some people that our clients have found very, very helpful. So here we go. Number 1, make an early payoff. Now, there are several things that you can do to make that happen. I'm going to share 5 techniques with you right now. The first one is make one extra loan payment each year. Now, by doing that, you can reduce the interest that you pay on the loan, and you can reduce the duration of the loan. And by making the extra payment in January, you're going to hack the total number of days that the mortgage is collected on. Here's one example. If a monthly payment is $3,160, you make one extra payment of $3,160 in a year, the mortgage can be paid off 6 years ahead of time, and you can net over $156,000 in savings. The next thing you can do to pay off your mortgage early is to make bi-monthly instead of monthly payments. So if we take that same example of $3,160 per month, cut it in half and pay $1,580 every 2 weeks, you could reduce the length of the loan to 24 years and have a net savings of $168,000. That's pretty cool. The next thing you could do is to round up the payment every month. So by increasing the monthly payment to a round number, you can save money on the interest paid and shorten the duration of the loan. So by rounding the monthly payment from $3,160 up to $3,200 every month, $32,000 is going to be saved in interest, and the duration of the loan will be about 2 years less. Next, you can go on the dollar a month plan. So by adding $1 extra every month, $900 this month, $901, $902 every month, you can reduce the duration of the loan by 8 years. And the last way to pay down your mortgage early is to use surprise money. You know that money that just sort of comes out of nowhere, you don't expect it? Maybe it's a bonus at work. Maybe you won the lottery. Maybe your Aunt Gertrude gave you a gift. I don't know, whatever it happens to be. If you take that money and put it on a vacation, that's great. Sounds fun. You can put it on a spa treatment. You can do a lot of different things with it. If you drop it down on your mortgage, you can decrease the amount of money that you pay, and you can decrease the duration of the loan. Mortgage hack number 2, use a HELOC, a home equity line of credit. A HELOC is a kind of a revolving credit line that's secured by your home, and it often has a lower interest rate than other loans do. You can use it for a lot of different things. You can use the equity from your home without losing your home. You can actually use the equity for a down payment on another property and keep your current property. Think investment property. You can use it for large expenses or to consolidate other loans, and an additional line of credit could increase your credit score. Mortgage hack number 3, remove PMI. Private mortgage insurance protects lenders in case you should default on your loan. It's also required when somebody puts down less than 20% on their loan. Now, once you have 20% equity in your property, or if you have an FHA loan and you have 20% equity in your property, you can remove PMI. Mortgage hack number 4, get rid of the escrow account. Now, an escrow account is there so that the lender is going to be sure that you have enough money to pay your property taxes and your homeowner's insurance on a regular basis. So it's required by a lot of banks. Now, after a period of time of perfect payments, a lot of banks will let that go. And if you're comfortable budgeting for property taxes and for insurance, that's the way to go. You'll reduce your monthly payments. Mortgage hack number 5, live in your investment property and have somebody else pay your mortgage. So think duplex, triplex, where you can live in one unit and have somebody else living in the other, paying rent to you, which actually pays your mortgage off. You're not paying a thing, your renters are. Mortgage hack number 6, refinance to a shorter term mortgage. If you can afford the higher payments, you can take a 30-year mortgage and refinance it into a 15-year mortgage and pay your mortgage off sooner. And mortgage hack number 7, make payments with a credit card. Now, it sounds crazy. Most lenders aren't accepting credit card payments for mortgages. Some are allowing people to set up PayPal accounts attached to their credit cards. So you make the payments through the credit card, and with the cash back that you get or the credits that you get, you can make additional payments to your mortgage. So there you have it, 7 hacks that you can use to reduce the amount of money that you pay and the duration of your loan, regardless of the interest rate that you have on your loan. If you have any other questions about real estate, you can text us at 321-427-3479. Visit us at hometeamspacecoast.com. And remember, you get to choose where you live. Live where you want.